What is stock trading? The term stock trading means the process or activity of buying and selling of shares in some particular company. If you invest and own the stock, that means you own a piece of that company you invested in. Stock trading is an activity that is performed with a vision that prioritizes short-term profits over long-term gains. It does involve some risk, so it's always better to first do proper research. Two main types of stock trading. Active trading. In this type, an investor places 10 or more trades consistent with 1 month. They use a method that is based heavily on timing the markets, seeking take advantage of short-term events. It turns of profit in the coming weeks or months. Day trading. In this type, the investors buy, sell and close their positions of the same stock in a single trading day, not caring about the internal workings of the underlying businesses. What is position? It refers to the amount of a specific stock or fund you own. The goal of the day trader is to make a couple of bucks in the next few minutes, hours, or days, which based on everyday price fluctuations. How to trade stocks. Step 1. Open a brokerage account. A brokerage account is a specific type of account which is designed in a way that it used to hold investments. If you don't have an account and wants to open it, you can open it with an online broker in just a few minutes. For those who might get scared of the idea of opening an account, no need to worry, because opening an account doesn't mean you're investing your money yet. It just offers you an option to invest in whenever you are ready. Step 2. Setting a budget. When you start trading, and even if you have enough talent for trading stocks, still issuing more than 10% of your portfolio to individual stocks is bit exposing, as you are exposing your savings to too much volatility. It's important to understand that one should only invest the amount of money that one can afford to lose. Don't use the earmarked money for near-term, must-pay costs like a down payment. Decrease that 10% in case you don't yet have a good emergency fund, and 10% to 15% of your earnings funneled into a retirement financial savings account. Step 3. Learn how to use market orders and limit orders. Limit order. One buys or sells the stock only at or better than a specific price that is set. If it's a buy order, then the limit price is going to be the most you are good and want to pay, and the order will only go through if the price of stocks falls to or below that amount. Market order. It is the type of order in which the buy or sell order is executed immediately at the current market prices. That is, as long as there's some willing sellers and buyers, market orders are filled. This is used when certainty of execution becomes a priority over the price of execution. A market order is called the simplest of the order types. Step 4. Virtual trading account for practice. If there's a way one can get experience with low pressure involved, it's no doubt great way, which investors are offered by the virtual trading tools. These tools are being given by many online stockbrokers. Paper trading is a way that let customers test their trading skills and awareness, and it also builds up a track record before putting real cash on the line. Step 5. The aim in measuring your returns against an appropriate benchmark. The final goal for picking up stocks is primarily to be ahead of a benchmark index. That could be the Standard & Poor's 500 index, the Nasdaq Composite Index, and other smaller indexes that are composed of companies based on size, industry, geography. Step 6. Perspective. It's important to keep your perspective clear and honest. To be a successful investor, it's not necessary to find the next great breakout stock before everyone else, because it's possible by the time you hear that news that some stock has popped. So many professional traders likely have already been priced into it. It may be a bit too late for making a quick turnaround profit, but it surely doesn't mean that you're too late to the party. Great investments continue to give shareholder value for years, which means active investing as a hobby is the way, not finding shortcuts for quick riches. Conclusion. New investors who are learning about stock trading are advised to always do good research before taking a step ahead. Take your time and make a well-thought-out decision. Your capability to handle risk and budget, etc. Many investors consider making a small investment at first, which is also a great way. Keeping things simple will decrease the pressure and wrong decision. There's no rush. Even if it's a small trade, you can learn a lot. That's it for today, folks. Thanks for watching. What do you think about stock trading? Please leave a comment below, like and subscribe for more videos.